there, folks. We've got another rough one out there in the market here today. NASDAQ moving down pretty big. S&P 500 moving down pretty big. Russell moving down pretty big, which I guess we can say is kind of expected after yesterday's huge bounce back in the market. But there's a new problem we have in the stock market that I want to explain in this video. And I want to explain exactly how this works, because I think a lot of people have never really seen one of these phenomenons before in the stock market and exactly kind of what's going on here. And I've seen this happen several times since I've been in the market, where investors start doing certain things that, and making certain decisions that are very, very different than they have been making, especially over the past couple years. And so I want to explain in depth exactly how this works and exactly how you break out of this cycle that we're essentially in right now, okay? So yeah, hope you guys enjoyed today's video as always. And also, big shout out to Moomoo. Thank you, Moomoo, for sponsoring today's video. We very much appreciate you. And if you want to get 5 free stocks valued up to $3,500 each from the professional trading platform, check it out. It will be pinned comment down there, and it'll be linked in the description, okay? So first thing I want to mention here is check out the NASDAQ, okay? This NASDAQ has fallen off a cliff. I mean, look at that drop there, right? Now, this doesn't mean the NASDAQ's done going down by any means, right? We got big tech earnings about to start here within the next few hours, and then it just continues for the next 2 weeks of massive amounts of tech earnings. Like basically everybody in the tech industry is reporting their earnings in the next 2 weeks, essentially. So there's definitely a realistic possibility that this NASDAQ could pull down to the 12s, maybe even 11.7, 11.5. Okay, now it doesn't mean it's going to happen. I just think it's interesting that, I sometimes I hear people act like, the NASDAQ hasn't really fallen or something like that. And it's like, no, if you look at it factually, the NASDAQ's on pace to have the worst January in the history of the stock market. The worst January in the history of the stock market, that's what the NASDAQ's on pace for. And this baby's falling off a cliff. If all of a sudden you get Mr. Softy to miss a little bit, you get Apple to miss a little bit, and those stocks go down, they don't even have to tank, right? If those stocks just move down 3-5%, it's going to pull the entire market down, and the NASDAQ will have been the worst in the history of January for forever. So that's something extraordinary there when it comes to the NASDAQ. Okay, the Russell. I mean, look at this cliff. This one's been on. Basically, it topped out in November. And look at that. That's what you call falling off a cliff right there. I mean, you had a nice little bounce back and then just straight back down. And obviously we're substantially lower on the Russell than we were basically the entire past year. So think about that for a moment. And the Russell, I've explained this in a video in the past, is the Russell's also another flawed index. Why is it a flawed index? The Russell's a flawed index because essentially it is weighted heavy toward the biggest stocks, like the NASDAQ and these other indexes are. So which means the Russell, to be truthful, if it reflected more how it should reflect, the Russell would be down far more than it's actually showing it's down, okay? So that one's just, devastating there. Check out this. I saw this on CNBC while I was prepping this video, and they were talking about this, and I was like, oh my gosh, I gotta put this in the video because this is too good, okay? Look at this recent IPOs here, okay? And Robinhood's down 84% from 52-week highs. Rivian's now down 67% from 52-week highs. Coinbase is 56%. But that Robinhood one is nothing short of shocking. Here's the thing with Robinhood, okay? I think their guidance is going to be pretty bad. I think their numbers are going to be, fairly bad. And so when it comes to Robinhood, I don't even know if this is a bottom. That's the thing. This stock's down 84%. And I'm really worried about their next several quarters when they have to lap over what happened last year, essentially, which was a huge boom for their business. And so, maybe all that's priced into Robinhood already, or maybe it has another leg lower. If this baby, goes another leg lower, this is a 90% drop. And I can tell you, even in my 14 years of being in the stock market, I don't know if I've ever seen stocks fall 90%, especially a famous stock like Robinhood. It's not like this is some no-name company or even a company that's going bankrupt, because we know Robinhood's got cash in the bank for a long time, right? And look, I mean, that's unbelievable, really, to be quite frank. That's unbelievable, an 84% drop, and it might still not even be done as crazy as it is, right? So that's nothing short of extraordinary what's happened with the hood. The brokerage space in itself is just extremely, extremely competitive. Companies like our sponsor here today, Moomoo, who are, entering the market over the past, couple of years, and they're tearing it up. And so that just makes it really, really tough for any of those companies to compete with a lot of these other companies out there, right? It's a tough space to compete in. Then if we go ahead and pull up my watch list for today, wow, okay, we got some big downward movers. Celsius down 6.7%, not a stock I own, but it is one on a track. Purple Innovation is a mattress, pillow company, bedding company. This is another stock that I track. I do not personally own. 6.4%. Downward move there. Lemonade, 6% downward move there. Fubo TV, down 5.5% there. Teladoc, down 5.5% there. Just, the thing with these stocks is, man, they just continue to pretty much hit 52-week low after 52-week low. Teladoc sold off really hard yesterday, so this is not a 52-week low. Teladoc technically yesterday, in the capitulation day, I call it, it did hit 64.99 if I recall. And so that one's not its 52-week low, but shoot, man, give it another day or two and it'll be down there. And so some of these moves are just extraordinary. A lot of these stocks are at all-time lows or 52-week lows, basically. I mean, it's I want to give a big thank you to Moomoo for sponsoring today's video. If you have not downloaded the Moomoo app yet on your phone or your tablet, I would definitely do so. It is one of the coolest, most in-depth apps I've ever seen, and you can actually place trades right through the app as well here. They get a 4.7 out of 5 stars so far on the Apple App Store, so very, very impressive. One of the coolest features for me personally so far using the app has been the calendar feature, which will essentially show you economic data that's upcoming, earnings that are upcoming, IPOs, dividend stock splits, things like that. That is the type of data that a lot of us as stock market investors, we like to know, like what are the upcoming earnings, or like what's the upcoming economic data that's going to be coming out that's going to affect the market, upcoming IPOs, dividend stock splits, things like that, okay? They also have free level 2 trading data right inside their app. I'll say this is arguably the most in-depth app I've ever come across in the stock market since I've been doing that. And right now they have a deal where you get 5 free stocks valued up to $3,500 each. Okay, 5 free stocks valued up to $3,500 each. All you got to do is check out the link in the description down there, set up an account. Really cool deal. Check it out. It's the first link in the description. Now, if we go ahead and take a look at Square stock here today, this one's down huge again, 5% plus. This one did hit 102 yesterday, so keep in mind it still is $8 above its 52-week low, but yeah, that one's getting hit again. Beyond Meat down 5%. Maxar Technologies 4.9%. I do own Beyond Meat, by the way. SoFi, I don't own this one. I obviously don't own Maxar, don't own Square. SoFi down almost 5% here today. Uberty Booba stock, I don't own this one, but I'm actually really, really interested in Uber. Down 4.6% on that one here today. So just these stocks just continue to get hammered. Amazon, Amazon's now $1,000 down. $1,000 a share down from basically where its 52-week high was just a few months ago. I don't think Amazon's ever had $1,000 move that I can remember, at least as far as a downward move. It's nothing short of extraordinary, and such a great company. Such a beautiful business model, such a profit machine, revenue growth for days and days and days. Like, when does Amazon stop growing? I don't even know. They just continue to be a growth beast. Their Amazon Web Services is a profit machine. They obviously own Twitch and Whole Foods and all those businesses. It's a beast, and their balance sheets incredible. They now have put themselves in a position where they certainly have a top 10 balance sheet of any public company in the entire world. And that's something that you used to not be able to say about Amazon in the past. But because the business has gotten very, very profitable now, they've been able to build a fortress balance sheet at this company. Cash flow is amazing. Management team obviously is amazing. Board of directors amazing. And all that, what does it mean? It means, 52-week low. That's what it means. It means 52-week low for the stock. And, this is one of those that, if I was thinking about buying big tech, I'm buying Amazon, I'm buying Facebook, flat out. Amazon, Facebook, those are money makers over the next 3-5 years. If I want a big tech, obviously the real opportunity in this market is with the smaller cap stocks, but those are riskier, right? Because they're smaller cap stocks. There's almost, I don't want to say no risk in Amazon and Facebook, but there's very, very little risk in those stocks. So, this drop's been, quite incredible. I guess that's the best way to put it when it comes to Amazon, okay? Now, look at this. Oh my gosh, Smile Direct Club, SDC. It's actually having a good day. SDC up 21% here today. This is, if you want to talk about a beaten down dog stock, it is SDC, Smile Direct Club. This stock has been decimated, completely decimated, right? And to actually have a good day, basically what Smile Direct Club announced is they're essentially going to focus much more on profitability in 22, which I think is important because this company's been burning through cash like nobody's business. And I think that's big. I think it's big for the company's stock price, and I think it's big for the underlying fundamentals of the company, because you can't continue to burn cash at the rate they were burning cash. So they're going to basically stop business in a lot of international markets right now, which I think is a smart idea. A lot of these international markets are a mess right now. And as a new brand coming in there, trying to sell clear aligners, even though they're so much more affordable than, braces and things like that, still, it just, right now, it's kind of like, don't do it at the moment, okay? Not with the way this company's been blown through cash and the fact that they're just not in that type of position right now. You can do that when you're more in a position of power. Right now, Smile Direct Club's in a position of weakness, and so the investors love it. I love it. Focus on profitability, get closer to the break-even cash flows or something like that, and we would love that, okay? We would love that because this stock has obviously got a long-term big opportunity in front of it. Corsair Gaming's up here today. Corsair Gaming has been holding really strong. Yesterday, it had a big capitulation day, I think, because a lot of folks at basically watch YouTube videos sold out of stocks yesterday. We saw that in mass from basically the open. And so that forced Corsair, which is a very popular YouTube stock, I would call it a top 10 most popular YouTube stock, it caused it to have a capitulation day. But outside of that, throughout this entire crash we've been going on, Corsair's been holding strong. It is holding strong today. It's held strong this entire time outside of the one day when essentially a lot of folks decided to, sell YouTube stocks essentially, right? So that one's quite interesting on a day like today. Avant ended up kind of turning green there, but yeah. So now you might think that the problem with the stock market right now is recessionary fears, which there was a big hedge fund conference yesterday, and they were even talking about during the hedge fund conference. This is a risk, right? This is a risk for the stock market. The talk about a recession, slowing GDP in general, but specifically recession, right? Now, in my opinion, although this is a risk for the market, I think you always have these moments, especially at the start of a new year, where people are worried about a recession. Like, oh, could we be in recession? And I've been looking at a lot of Google Trends data that's been really troubling. Obviously, Rona has had a negative impact over the past month or two because cases went absolutely insane. But guess what? Now they're going to start tanking down. They just started to tank down over the last few days. They're going to continue to tank down throughout February and March. And so the whole Rona thing is going to go from a big headwind for the economy to potentially a tailwind. Because, imagine you get Rona and you can't go anywhere. You're quarantined, stuff like that. That's an economic hit. There's no doubt about it. That's a bad economic hit to the entire economy. And I don't think the Fed's even paying attention to that, unfortunately. And I don't think the administration is paying attention to that. And that's unfortunate because I'm like, you can't just like I don't know what they're thinking. Like if all of a sudden, massive amounts. We've had days where there's been 1 million plus cases here in the United States, several days, and been rolling at an 800,000 plus clip on a 7-day average. When you have those sorts of numbers, it's gonna hit. It's gonna hurt the economy. It's gonna hurt spending. It's gonna hurt everything. And so I think the administration's kind of been asleep at the wheel, unfortunately, in this situation where they haven't done anything. And I wish they wouldn't have done so many stimulus checks last year and they actually would have saved one for right now. Because right now is actually a moment that I think would have been a smart idea. Like, let me guess. Okay, everybody's got Rona. Oh, that's probably going to take a hit to our GDP. Oh, maybe we should go ahead and pump some money out there in the economy right now. Instead, they decided to do it all at once last year when the numbers were substantially lower than where they're at now. And I just look at that as a situation where I'm like, man, I think they kind of, they went way overdid it last year, and now they're not doing anything to help out. And it's just like, and here we are with cases that have gone to the moon, okay? If this was if Rona cases was a stock price, we'd all be on it, okay? So, but at the end of the day, that's going to go from basically a headwind to a tailwind. As that goes down, that will help likely the economy at some sort of fashion, right? And so that's good. But yeah, at the end of the day, I think recession is somewhat of a risk to the market, but I don't think it's as big of a one as a lot of folks maybe think about. For many various factors, okay? Now, earnings are a risk to the market. But it depends on what you're looking at, okay? Earnings are a risk to the market to a lot of stocks that have held up decent, or done well over the past year. I'm thinking about Microsoft. I'm thinking about Tesla. I'm thinking about Apple. For companies like that, earnings are a risk, okay? Even companies like MasterCard and some of those, although they've come down massively in valuation, I think guidance is going to be key. But this is a risk to the market, but I don't think it's the biggest one we have going on right now, and I don't think it's the biggest problem we have in the stock market right now, right? I think when it comes to Microsoft earnings, Microsoft's an interesting company. It's kind of almost sells needs-based items. Like, you don't sign up for, the Microsoft suite of products if it's not like it's a want, right? It's like a need. Like, I need this for my business or whatever. That's why people sign up for Microsoft. So I think their earnings aren't the most interesting. I think Apple's earnings are the most interesting of this week, and maybe Tesla as well. Now, if Tesla pulls down, that will pull down a lot of the other growth stocks likely. It'll pull down the NVIDIAs, the AMDs, the Shopifys, and a lot of the other big growth stocks with big valuations, even Amazon probably. Now, if Apple pulls down, it'll likely pull down the entire market because it's such a big market cap and it affects so many semiconductor stocks. Plus, if Apple has weak guidance, I think that could be a big risk to the market. But this actually isn't even the biggest problem with the stock market right now, although this is a problem. Now, the good news is for a lot of the smaller cap stocks, this earnings season is what they need, because the small cap stocks, many of them are down 60, 70, 80% plus. They haven't been performing well. A lot of these stocks need news. They need some sort of news. When you get into a rough market, the last thing you want to do is just be silent in terms of a company, right? And a lot of these companies haven't had any press releases since November or maybe December. And so that was like an eternity ago, right? It was an eternity ago. And so for the small cap companies, this earnings season is actually a good thing. For the large caps, I'm a little scared, okay? But that's not the biggest problem the stock market has right now, okay? When we really break it down, the biggest problem the stock market has now, and I want to explain exactly how you get out of this situation, is, and I just pulled up SoFi stock here as like a random stock to show. But essentially what goes on is right now in this market, there is you can't get stocks low enough, essentially. And I listen to, people I know that are in the market. I'm in these communities on YouTube and Discord and things like that. I watch CNBC, because I like watching CNBC usually only when the market's tanking, because I like to just hear like what they're talking about, what's the perspectives out there. And every person I see go on CNBC, they're either nibbling at stocks, meaning buying small amounts, or at best case scenario, they're buying a little bit. Like, that's best case scenario. I haven't heard anybody go on CNBC for weeks now and say, I'm loading the boat right here. You got to get in the stock right now. I don't hear anybody talking like that. Everybody is like, I'm just either holding, maybe nibbling, or even some are shorting this market and buying puts, okay? And so you have this situation in the market where it almost seems like these stocks can't get cheap enough. Okay, and folks are looking at it, and whether it's a SoFi at 12, or whether it's a Tattooed Chef at 10, or whether it's a Robinhood at, I don't even know what Robinhood was at, down 84%, or Tesla, let's say Tesla was to go down 700. It doesn't matter what the stock is. The market is in this moment where people are like, maybe I'll nibble at these stocks a little bit, but I don't really need to buy it heavy right now. I'm not into that right now. And when you're in that sort of market, it gets tough, right? Now, the only way you break out of this, the only way, okay, it's not even by stocks going down more, because these stocks are already devastated. That's not going to fix things by just stocks magically going down. You need some big people in the market, some big funds to really start adding aggressively and to start shooting the indexes up, okay? And if the indexes start to rise and do it quite rapidly, that gets everybody off their butt. As long as the market is downtrending, no one's in a rush to buy stocks, because it's been going down. It's probably going to keep going down. What's the chances it goes up, And so everybody's kind of like, there's no rush. There's no rush. I don't need to rush. I haven't heard one person go on CNBC and say, go buy stocks right now. Load the boat. No one's talking like that right now. You're in this sort of market where people are sitting on their hands or maybe nibbling shares a little bit. So like, why do I need to go buy SoFi at 12? It might be 9. Why do I need to go buy, Apple, if it goes, let's say Apple goes down 10%, a lot of people are going to be like, do I really need to buy Apple down 10%? So that's the main issue we have in this market, is where people just aren't getting off their butts to really go buy stocks right now. Because we've been in a downtrending market, no one's in a rush. No one's in a rush. And even if these stocks go down more, they still won't be in a rush. It's not till you get a big uptick in the market that all of a sudden people start saying, okay, no, we're moving up. Well, we just moved up 5% in the indexes. Okay, let me get back in. Or let me start adding more aggressively. And all of a sudden the FOMO starts coming in and everybody's like, oh, small caps are moving, get in. And then all of a sudden you start to kind of get this like fever pitch going of like, oh man, they're moving. Yeah, I got to get in. And then you start getting kind of in a, not like a FOMO cycle like we were in at this time last year, but you start getting some, you get people off their hands essentially, and to start saying, I got to buy this stock. Whereas right now they're kind of like, what's the rush, right? And so that's a huge issue that the market has right now. It's just that kind of overwhelming, kind of like, is it really a rush? Even with yesterday's massive sell-off, capitulation in the NASDAQ to that big turn, even a lot of people are kind of like, I don't know, man. We'll probably just go back down. And obviously today the NASDAQ's back down. So a lot of people just aren't in a rush right now. They're not in a rush to buy stocks. And if you have all this institutional money, all these hedge fund managers, all these folks that go on CBC and that control money, and they're like, I don't really need to add aggressively right now, then it gets hard to break out of that cycle until you kind of get a coordinated move from a lot of big money that all of a sudden sends things up, and then all of a sudden everybody starts hopping on the bandwagon, okay? Anyways, guys, hope you enjoyed this. As always, you know me, buy the dip, man. Much love, and don't forget to subscribe. Thank you again for Moomoo, our sponsor for the day, and have a great day.